Hello, guys. Welcome to Gold Snipers Public Group. And this is a welcome video. And I want to, do a brief introduction. Okay, before we start our group, tomorrow. So this brief introduction video will cover some basic topics which I want to cover with you guys before you guys go and actually take the trade. Okay, some basic things I wanted to share with you. So these topics are basically risk management. How to take trades, the importance of stop loss, importance of planning, introduction to risk per trade, introduction to risk to reward ratio, and there is also one more thing I forgot to say add over here, that is trading psychology. Okay, so let's quickly begin. First, we'll begin with risk management. Okay, very first thing I want you to note down is that whenever you are taking a trade, okay, you have to manage your risk. You need to have in your mind how much loss you are willing, how much loss you can take. Okay, now I will tell you what the professional people do. The professional people, they risk only 1% of their capital per trade. I'll just write over here 1% of capital per trade. Yeah. So if you have, let's say, like $1,000 balance, okay, then you should risk only $10 per trade, not more, not a dime more than $10. Okay. And the reason being is that if, let's say, if you are risking like 25% or let's say 50% of your capital, this is easy to understand. If you are risking, let's say, 50% of your capital, okay, and you get hit by stop loss two times, okay, then in two trades which hit SL stop loss, you get kicked out of the market. Okay, your account gets blown. Yeah, so within two trades your account is getting blown. If you take, like, if you risk 25% of your capital, okay, then in four trades your account gets blown. Okay, but if you risk, let's say, 1% of your capital, okay, 1%, okay, every time you take trade you just risk 1% of your capital. Okay, so it will take 100 trades continuously to blow your trading account. Okay, so this is what the pros do. Okay, the successful traders, the institutional investor, they risk only 1% of their capital per trade. I know this is very little and all, but we have to follow. You see, you if you want to make big money, you also have to follow the big people. Okay, if you follow the little guy who is losing the money, you too will lose the money. So this rule is very important. Only risk 1% of your capital. Example also I'll write it down. If you have $1,000 as capital, then only risk $10 per trade. Okay, not more than that. Okay, for people, for people who have like $100 capital, only for these sort of people I will suggest take 2 to 3% risk. Okay, so 3% risk will again translate to roughly $10 per trade. It's a bit more than 1%, but because your balance itself is so low, that's why I'm suggesting you can take a 2 to 3% risk on your trade. Okay, because we need to keep a sufficient amount of stop loss also. Okay, so this is the first golden rule of trading. The second golden rule of trading is, remember, you need to, less is more. Okay, that is less. The lesser the number of trades you take, the better. Okay, unless you are like even if you are scalping, also same philosophy is, the lesser the number of trades you take, the better. Okay, the more you trade, the more you are giving the market the chance to kick you out of the market or hit your stop loss. Okay, so what the pro people do, okay, I'm not talking about scalpers here, but what the professional traders, positional traders, intraday traders, swing traders, what they basically do, they take maximum, okay, maximum 3 trades per day. They do not take more than 3 trades per day, and some are even more conservative. Okay, and I'll prefer the conservative approach. What they will do, okay, they will take first trade. Okay, and if first trade is profitable, okay, is profit, profitable. That means if their analysis is right and that trade is profitable, they will close the system and will be done for the day. Okay, but if the first trade is hits stop loss, okay, for them, then only they will take the second trade. Okay, then they will take the second trade. Trade. But let's say if both their first and the second trade hit stop loss, they will close the system and go back to their work. Next day they will come. Okay, so they only trade 1 to 2 trades max. Okay, and some traders take 3 or more trades also. But my personal recommendation is if your first trade, your analysis is right and you have made the profit for the day, okay, you need to be happy for that day and you need to leave out of the market. Okay, you're done, you made your profit and we'll come back the next day. Okay, so this is the second part. Okay, now let's tell you how to take the trades. So I will be giving based on our analysis, previous day analysis, video analysis, and the PDF form. I'll give you my view for tomorrow. Okay, so the way you take the trade is we will keep a $5 stop loss. Okay, we will keep a $5 SL. In general, gold $5 stop loss is more than sufficient. Okay, and our target and our targets will be minimum, or we can say will be approximately, means sometimes it may be less than 1:1, but generally I will say approximately, depending on where the next resistance or support is, will be approximately 1:1. Okay, and what we will try to do is we'll keep a $5 stop loss and target. Let's say if I bought at 1920. Okay, I'll write an example here. Okay, I purchased at 1920. Give me a second. Yeah, I purchased gold at 1920. Then my stop loss would be 1915 and my target would be 1925. Okay, so this way we will be taking the trades. Okay, $5 stop loss and $5 target at the same time. Okay, remember I told you you need to keep one per risk 1% of your capital. So my capital, let's say, is $1,000, so I can risk $10 easily per trade. So what I can do is I can split this order. Let's say gold price did not came somewhere close to like 1922, and based on the candlestick pattern I feel that price will may not come down till 1920. It may reverse from here. So what I will do, I will buy 0.01 at 1922. Okay, and what will I do? Our stop loss will be based on this. Our stop loss, since I told you it's a $5 stop loss, I'll keep my stop loss at 1917 and my SL will be at 1917. Okay, and similarly I will buy 0.01 again at 1920. Wait, give me a second. Yeah, correct. We can add even at 1921 also. This is also fine, because I will tell you. So my first entry at 1922, if it reaches 1917, my total loss would be $5. And at the same time, when the second entry I took at 1921, if it goes and hits the stop loss at 1917, my loss will be $4. So total loss is still total loss will be $9, which is below our 1% risk, 1% capital that we told we will risk. Okay, but what we are going to do is, if let's say if I took trade this way, okay, and let's say my TP1 is at I'll write here, my TP1 is 1925. That is my target profit. First target profit is 1920. My second target profit, let's say it's 1930. So what I will do when 1925 comes, I will book my first entry, which is this 1922. I'll book and take the $3 profit. Okay, and this second entry, which is at around 1921. Okay, I will put it at break even. Break even means the price at which I bought, at the same price I will put my stop loss also for the second entry, so that when, let's say, if price comes and hits my stop loss, my max profit is $3, and the second trade I won't lose anything. But at the same time, if this entry which I took at 1921 price comes and hits 1930, so this second entry my profit will be $9, and my first entry profit is $3. Okay, so 9 plus 3, $12 profit overall you made in this trade. Okay, and your risk was $9. So it's a very, if this way you trade, it will be a very good risk to reward ratio. Okay, so this 1925, when I said 1 is to 1, approximately 1 is to 1, 1925 I was assuming it's a support, sorry, I mean it's a resistance area. So either the nearest resistance, or if there is sufficient distance, then you can aim 1 is to 1 target also. Okay, but let's say if the TP1 was at easily 1 is to 1 target, then this profit would have been 1 is to 2. Okay, so this is how we are going to trade. Okay, now the third, we will get to the third point. The third point is, it is very important you place your stop losses. Okay, without stop loss, do not enter a trade. If you have entered a trade, immediately place the stop loss. Okay, do not trade without any stop loss. This is the most risky business. Okay, your your account can get blown also if you do not keep a stop loss. Okay, and the fourth part is planning. The planning part, don't worry about it. You For that, I will suggest you watch my analysis video on a daily basis. Okay, you will easily understand what our plan is. Okay, along with the PDF file which I will be sharing in my Telegram group. So from there also you will get the planning part. The fifth part is risk. I think risk per trade we covered. Okay, how much to keep? That is 1% of your capital. Okay, and so this is covered. Risk to reward ratio. Now this is an interesting topic. Risk to reward ratio basically means how much. Like if I'm risking, let's say for example, if I risk 1 rupee, okay, if I take a risk, if I take a trade with a risk of 1 rupee, okay, then my target, let's say if price hits my target and I make 1 rupee, so what is the risk to reward ratio in this case? It's 1 is to 1. That means my maximum risk is 1 rupee, my maximum profit is also 1 rupee. When your risk to reward ratio is 1 is to 2, that is 1 is to 2, that means if you win you will get 2 rupees, if you lose you will lose 1 rupee. Okay, so this is 1 is to 2. See, the higher the risk to reward ratio, the more the less accuracy you need per trade. Okay, so yeah, correct. So there's a I'll show you risk to reward calculator. So this is I'll show you. So if you see here, I risk, let's say I risk $1, and if my analysis is correct, I will make $1. So my break even means the point at which you make no profit or no loss. That is 50%. This means I have to be accurate 50% of the time. Okay, if my accuracy is 50%, okay, that means it's no profit no loss. For me to become profitable, I need more than 50% accuracy. At the same time, if you, let's say, risk $1, but you're getting a reward of $2, so if you do this, see how drastically your risk to reward ratio changed. It's now you need to be accurate only 33.3%. Similarly, if you go 1 is to 3, it becomes 25%. So you need to be accurate. So 25% accuracy means, let's say I took a trade, first trade was loss, second trade was loss, third trade was a profit. So let's say first trade I lost 1 rupee, second trade I lost 1 rupee, third trade I won 3 rupees. So the previous two trades I lost 2 rupee, third trade I won 3 rupees, so my net profit is 1 rupee. So this is what it says, that you need only 25% accuracy if you keep a risk to reward ratio of 1 is to 3. Okay, but according to me, getting this, you need to be a play in a longer time frame, a positional trader and all that. For intraday basis, I suggest 1 is to 1, max 1 is to 2 is a good risk to reward ratio. Okay, so this was the part of risk to reward. Now we'll cover the trading psychology. Okay, so for trading psychology, some rules I will make. Okay, some rules, these rules we need to strictly follow. That is, one first rule is we will take max one we will take one trade, and if that trade is uh, if that trade hits target, then we will be done for the day. This is the first rule. If let's say our first trade itself hits the target, then we will be done for the day. We will not be taking any further trades. If our second, this is if SL hits, then only we will take second trade, but no more than that. So if our stop loss hits on the first trade, only then we will attempt the second trade. Otherwise, we will not attempt the second trades. We will take maximum two trades per day. Okay, not even three, two trades per day. And if SL hits on both the trades, we will close the system and will be done for that day. Because so that why I'll tell you the reason being, because if we are like if two trades hit SL and we get a loss, we become emotional, and we try to do revenge trading. In revenge trading, let's say I lost two trades, I lost $20. What I will do, I will get emotional and I'll increase my quantity and try to recover that $20. Okay, and in the end we end up losing even more money. Okay, so that to avoid that tendency, if things don't pan out as per our plan, it is better to close the system and be done for that day. Okay, so we will follow. So that's why I'm saying, if two trades hits SL, close the system and forget everything, will come down the next day. Okay, this is two things. Then secondly, strictly follow the plan. Okay, the plan that we make the previous day, based on whatever we analyzed. Okay, we'll strictly follow the plan. Okay, do not most of the time we do not need to deviate from the plan. We can strictly stick to it. Okay, and third thing, if you are not sure or not confident about taking a trade, do not take it. So if you're not sure about whether if you're not confident about your trade, okay, you're just taking trade for the sake of trading, like that, you're not sure whether it will hit target or not. Okay, so it's better you do not take the trade. Okay, it's much better in that way. Okay, fourth, manage your quantity. Okay, this is very important. Like I told you in the first part, that you need to manage your risk. You do not risk more than 1% of your capital, and the quantity you need to keep strictly under control. Okay, your quantity, because the reason being, if let's say, if instead of $10 risk, I buy a quantity of 0.1, so my risk becomes for every dollar gold moves, I get a $10 profit or loss. Okay, what will happen if the quantity you buy is more than your more than you can manage? So the problem there is that you will be very anxious. It will cause a lot of anxiety. Okay, you will not be able to logically take the trades. That's why I'm saying, take only the the quantity which you can manage. Do not buy big quantities and stuff, because ultimately, yeah, the second, this point I will write over here. Our main goal and objective is to protect protect our capital and grow our balance. Okay, this is the number one goal. Okay, our it is to protect our capital and grow our balance. Okay, this is the number one objective. Okay, to protect our money. Okay, it is very important. That's why everything about stop loss and risk management, it's about this, to protect your money and to grow it. Okay, and an interesting fact I will share with you guys. Okay, let's say, yeah, one second. Let's say I want to grow. let's say rupees 50. If I want to make rupees 50, if I want to turn rupees 50, or let's say yeah, I'll take another example. If you want to, let's say, if rupees 100 has to go to rupees 50, okay, let's say right, okay, wait, I'll put it like this: starting point is 100, end point rupees 50. So in this case, when you're starting, let's say if you have 100 rupees, okay, and you lost 50 rupees, okay, you have a balance or remaining of 50 rupees. Now, this is an example of trading. I'm taking just a hypothetical example. Let's say you have 100 rupees trading balance and you lost 50 rupees. Okay, now you have only 50 rupees in your pocket. Okay, so now when from now, if you want to make that 100 rupees again, your trading balance has to grow by 100%. Okay, so that basically means if this 50 rupees grows by 100%, okay, then only 100%, okay, if it grows your trading balance, then only you will again get back to rupees 100, you chose your original balance. Okay, but at the same time, let's say uh, if let's say it's a sorry, here, when you were losing money from 100, when the price, when your rupees 100 went to rupees 50, it only lost by your balance was lost by 50%. Okay, so just imagine, when your money went away, you lost 50%, but to make that money, your money needs to, original amount needs to grow by 100%. So this is basically telling the point of market, that is, price goes up slowly, but when it comes down very fast, and anything can go infinite amount of percentage upwards, but it can only come down by 100%. It cannot come down, it cannot go below zero. Okay, so 100% is the max. So just imagine it, 50% of your money gets lost, okay, but to recover that, you need your remaining money to grow by 100% rate. So see the difficulty how it is. So you that's why, we need to protect our capital. This just shows you why you need to protect your capital. You can lose your money easily, but to make that money, it is very difficult. Okay, you need to the double the growth rate to recover that money itself. Okay, so these are quite some interesting points. Okay, I will now proceed with after this video, I'll make another analysis video. That video I'll share with you guys. Okay, on my I'll upload it on YouTube and then share it on our Telegram group. Okay, if you yeah, so that's all I wanted to conclude. And the the chart, okay, which I am going to be making, okay, that chart I will share it with you guys on the Telegram channel. I want you to just save that chart and keep, or you can mark it, in your, if you know how to draw in investing.com or tradingview.com, go and make that chart. Okay, mark the levels or write down the critical levels. Okay, and also at the same time refer to our trading plan also. Okay, because I want you guys to also learn this. Okay, so that's all I wanted to say. So thank you, and have a great day then. If you like my video, do like, share and subscribe it. Okay, thank you once again.